Okay, welcome back. I mean, we've got the market, which is, 12 points lower right now. It had sold off a little bit more. There was a bit of a dip, but I think that's been bought into. So it's not one way at all. Let me just quickly take a look at sectors where there is maximum pressure. So there is metals, which Rima mentioned earlier. Nigel talked about it, that as well, 1.6, 1.7 lower. Real estate, private banks and pharma are the other areas, which is lower. In pharma, I think I mentioned the Aurobindo stock just a while back in terms of the sell-off that we are seeing. Let's sort of stick with commodities for a bit longer. My colleague Manisha Gupta is joining in to tell us what's top of mind right now. Manisha, morning.
I'm talking about a gainer, Prashant, and I'm looking at the sugar prices, which have continued to run up. We actually have seen nearly 6% of gains in the month of May for sugar. And when you look at this year, it's a double-digit gain that has continued for a second straight year in 2021 till time. Well, the latest figure comes in from Brazil, which is the biggest producer and exporter for sugar as well. 21% of global sugar gets produced in Brazil, and 45% of the export numbers in the global markets also come in from Brazil. And now Brazil has been facing drought for a last couple of years. Last year as well, the crop was weak. This time around, the latest report suggests that Brazil is looking at the worst drought in last 91 years. So the market experts say that the next crop in Brazil also is expected to be on the lower side. So much so that the Brazil government says that they will decide on water allocation between agriculture and energy by next week. So it really has come to that. And the markets are adding a lot of premium to sugar because of that there. Well, India definitely stands in a beneficial position because of that. Out of the 6 million tons that was mandated from the government to the sugar mills, nearly 5.7 million tons has been contracted at 6 rupees per kg of a subsidy. 0.3 million tons has been done at 4 rupees per kg because the government did cut that subsidy. And there are more contracts being initiated even after the 6 million ton has been mandated without subsidy also, because the global prices are trading at near 18 cents a pound, which is quite higher than what the sugar as a sector will get in the domestic markets. In any case, we are looking at a surplus supplies from UP and Maharashtra. So these couple of states perhaps will continue to export. So that clearly seems quite supportive right now. We have seen sugar as a sector continue to run up. The ethanol story has been quite strong. The export numbers have been quite positive as well. And the markets do believe that this rally could continue, especially with the a kind of deficit that the international markets are looking at. And it's not just Brazil. Thailand also is looking at a lower sugar crop this time around. So with the kind of surplus and stocks India has, the exports do look lucrative, and so does the sugar sector.
Manisha, thank you very much for that important update. Let's now shift our attention to Neogen Chemicals. The stock is down 3.5% today, though in the last 1 year, the stock has doubled. Harin Kanani, the MD of the company, is now with us. Morning, and thanks so much for joining in. This is Rima here. Before we get talking about, the Q4 numbers, I think in the conference call, you did give an FY24 guidance. If you could just tell us a little bit more about that long-term outlook, what is driving the numbers, and if you could just tell us what the outlook is for FY24 in terms of revenues as well as margins.
Hi, thank you so much for having me here. So what has been a big positive for us in the last year is that we were looking to operationalize organic capacity in Dahej, our Dahej Special Economic Zone unit, which is catering to our exports customer, and especially our focus there is to make more advanced and value-added derivatives. So this capacity, in spite of pandemic, has now come online. And with this, our organic production, which contributes almost 80% of our revenue, so that capacity is already doubled. And 2 quarters ago, we had asked, or we had also planned to add further additional capacity, which is also the capex of that is also running in parallel. So by end of this year, we will have a capacity in place to have a revenue, or to reach a revenue of almost 650 to 675 crores. And our expectation is that this capacity will be in, the second phase capacity will be in place by end of this year, and will take 2 years to fully utilize it, giving the strong demand that we have from international customers. So by FY24, we are trying to have maximum utilization of this capacity, which is what is giving us the visibility or potential to reach up to 650, 675 crore by FY24.
Okay, that's on revenue. And what about margins? Will you be maintaining margins around this 19% mark?
Yeah, so we've given current guidance of 18% plus minus 1%, so 17 to 19% range as we grow and increase our revenues. This is just for the current year, and because we'll have some scale benefits, product mix improvements, they could improve over a period of time. But we first want to utilize the new plant for a year, and then we will give a guidance on margins going forward. But for the current year, we've kind of kept the 18% plus minus 1% as our margin guidance, which has what we've been doing for last 2 to 3 years. So since it's a new plant, it's just getting operationalized, there might be some lower utilization. So there'll be some benefits from the exports and tax point of view, but we currently want to just maintain the current levels.
Right. So are lithium prices higher right now? That is an input for you, and how is that impacting you?
So actually, lithium prices over the last 4 to 5 years have been on a significant increasing trend, except during COVID, especially during the early phase of COVID, there was a lot of questions against automobiles and EV vehicles, etc. So last year was an abnormal case where there was a lot of capacity in place to deliver lithium from the mines, but there was not so much demand. So last year, again, it was very fluctuating, and it was going, there was a downward trend, and it reached some of its lowest prices. However, in this Q1, the shipments which are happening from Chile, Argentina, the prices have again started increasing. So last year, we had because the lithium prices were lower, we had a revenue hit of almost 18 to 19 crore, because majority of these benefits we also passed on to our customers. But this year, again, the prices are coming back somewhere in the middle, which is more reasonable long-term point of view. So we keep a watch on that. But in the current financial year, the hit which we had last year on top line because of lithium prices being down should be reversed.
So this is only a revenue impact. I mean, it's all complete pass-through. There's nothing on margins because prices going up or down.
Yeah, not significant. So, in lithium, we have customers with whom we have worked for 10 years, 20 years, and even some of them 25, 30 years. So they are very old relationships, and, we always keep it very transparent with these customers. So there's no impact on the margins. It was only the top line.
Can you give us a sense of the demand right now due to the second wave? Has it been impacted?
So the demand, so we basically serve pharma, agri, and to some extent engineering industries. These are the three key sectors for us. So the demand in all three sectors remains strong. The pharma and agri, mainly because of being essential commodities, the demand is quite strong. And also in the international market, there is continuous interest to shift from China to India. So we keep getting more and more inquiries. And, mainly what the second wave impacts is the operations. So operations, new capacity addition. So that's where, you have some challenges. But in terms of demand, the outlook remains quite strong, and there's no major change in that.
And in terms of supply execution, has there been any impact in the months of April and May? And you spoke about CAPEX. Could you tell us what the debt on the books will look like by the end of the year, or once the entire CAPEX is on stream?
So I think, so in terms of operations, yes, April and May, there was some disruptions, and the Dahej unit also was likely to start in early April, but instead we kind of got about a month's delay, and we started in early May. So there was about a month's delay in that. But other than that, our team managed quite well. And operationally also, there are some challenges, some engineering supplies, critical spare parts we need. Sometimes we are not able to get. But I would say it doesn't, we were already working at full utilization level and above. So there is some impact, but it's still within reasonable level we have been able to manage. As compared to the debt and the CAPEX, so we had two phases of CAPEX. First phase was a 75 crore, which was operationalized last year, and the second phase was 55 crore, which is going to come in picture this year. So which is partly already done last year and partly will be done in this year. So at the end of it, we expect, a long-term debt to be somewhere in the range of around 150, 160 crore, and also to support the increase in working capital, increase in our business. So our revenues are likely to touch 450 crore. That is the guidance we have given this year. So we are expecting a debt level somewhere around 250 to 275 crore with about long-term debt of around 150 to 160 crore and short-term debt of about 90 to 100 crores.
Mr. Kanani, we'll leave it to that. Thanks so much for joining in. So those are some numbers from Neogen Chemicals. FY22 revenue guidance at 450 crore. By FY24, once the entire capacity is on stream and pretty much utilized effectively, they're looking at revenues of 650 to 675 crores. We'll slip into a break, but up next, we'll get chatting on the market technicals. It's now a full 100-point drop on the Nifty from the day's high, which was 15,660. Mitesh Thakkar will join in with his view on the indices and individual stocks.